Welcome, and I will go straight to the presentation. And first is to thank you very much for joining, and to also request that we engage as much as possible so that we are able to answer the questions that you have raised, and also to be able to ensure that we are all on the same page. So I will do. I will start with the basics, and my I'll start with the basics. And first, the question is, what is compliance? Because for you to be able to comply, there are what we call foundations. So first, I want to ask you a question. How do you know that you are complying? Or what do you think is compliance when it comes to tax? So foundations of compliance, basically what guides compliance. And the first is to know what laws or regulations guide compliance. Do you understand? And it's not just tax, it's the general business industry. Are your licenses right? Do you have a PIN? Are you aware of the sector that you are in? For instance, if I was to talk about the betting industry, are you licensed as with the betting and gaming regulations? So you need to understand, this is my business. This is the law that applies to my business, and this is the expectations. If you're in real estate, what are your incomes? Then the most important, after you understand the laws and the regulations, is, are your records right? Because what happens with most businesses is that we operate with records. We have our bank statements, we have our M-Pesa statements, but they are not backed with supporting documents. So that's the other question. Are you maintaining your records? The third one is, are you reporting or filing your returns on time? And when we talk about returns, we are not just talking about tax returns, but even returns that are supposed to be submitted at the company registry, because you can comply on one side and fail to comply on the other side. Then the other most important thing is ensuring that you have internal controls or procedures. Like, for instance, you can say, before end of the month, maybe by 25th, for me to be able to plan my taxes, that I need to have a review of the position of the business, how the business is performing, and to know even how do I plan or how much tax is payable. And then the other one is continuous updates. Are you keeping up with them? New laws. I know most of you are aware that the laws keep on changing. The question is, when the law changes, do you change your operations, or do you wait until maybe the law catches up with you and then you're stuck? So it's the basics, and these are the fundamentals. Do you have a PIN certificate? Do you have a register? Are you registered as a proprietor, as a partnership, or as a company? If it's a partnership, which profession are you in? If you're an accountant like us, if you're lawyers, if you're in the valuation sector, do you understand the laws? What are your tax obligations? Some people call me and tell me that I'm not supposed to be paying VAT. Why should I? Recently, I received a question from one of our clients. As, by the way, why should I pay VAT on services? And that's why we are saying that at the fundamentals are, you need to know what are your tax obligations based on the business sector that you're in. Are you keeping records? Are you using your personal bank account to run the business? Or are you using your business account to run to pay for your personal expenses? When you are applying for a tender, are you checking whether you have a tax compliance certificate and whether your tax obligations are in order? Nature of business. What is the business that you're doing? I talked about that. For instance, there are those people who are in the business that does not require VAT, or those who are dealing with exports, their VAT is zero. The question is, do you understand the business that you're in? Once you understand that, then you are able to ensure that you comply. And just to make sure that we are all together, I'd like to request my co-host Eric to do a poll so that we can see what is it. Are you compliant? Do you have all the foundations in place? Eric or Joseph, you can. So we can answer and say, do you understand why you pay the taxes that you remit? Or do you think they are so punitive? What or do you pay because if, for instance, you're an accountant, you just found that we pay VAT on 20th, so you just make the computations. Do you understand the why? Mhm. Uh, how many have voted?
We have 13.
13, okay.
14.
All right. Maybe you can, let's see the results. And I'll be inviting maybe one or two people to say. So majority are saying yes, others no, others are not sure. Can I invite maybe one of the people who said not sure to give us an answer? You can just raise your hand and we'll be able to unmute you. Anyone who wants to say, you can raise your hand. If you said no or not sure. Okay, I can't see any hand. And so I'll go into the next bit. Please feel free to chat us so that we ensure that we are all together and following. So I will go into the next presentation. Ian, are you ready? Oh, okay, Nicholas has raised his hand. Yes, Nicholas, let me unmute you. Yes, Nicholas.
Yes. So actually, what I did is I actually said yes, but after you then explained, is it just because you've been told you need to pay on the 20th? I think maybe my yes is just because I think I should, not really the why. So maybe I don't really understand either. It's just something we would have done.
You do it because it's normally being done, but you don't know which provision of the law probably
Exactly.
applies to your business. What business are you in?
I'm in telematics, so that's vehicle tracking, fleet management. Yeah.
Okay. Okay, maybe by the end of the session, we will have tried to explain and expound, and you will get to understand. So I'll start with VAT income. Okay, Arthur. Arthur, you want to say something?
Yeah, good morning, everyone.
Morning.
Yeah, I only pay taxes because it's low. Otherwise, if I had an option, I wouldn't pay.
You only?
Pay because it's a low. If
Oh,
I had
you
an option, I believe most of us here will not pay.
Yeah, most pay because it's the law, and
Hello.
yeah, we have to comply. We have no choice.
Yes. Hi.
Okay, please mute Nicholas. So I'll go to thank you, Arthur. So I'll go to
Or
To the next, yes. I go to my next. My colleague will take us through income tax. So I want to skip that a bit and go straight into VAT. Most of us here pay VAT. The question is, do you understand why you pay VAT? So first, just to try and explain it in layman's language, is that VAT is an indirect tax. And what do we mean by it's an indirect tax? It is not us as business people. I want to believe most of us here are representing businesses. So it's not us as business people who who pay the tax. We are agents of the government. Who pays VAT? It's the consumer. The biggest example I can give is when you go to the supermarket. When you go to the supermarket, you will buy, for instance, a meal, or you'll buy some toys for your children, and you will pay that VAT. You as a final consumer, there is no single point you will be able to claim that VAT. The supermarket collects that because it is an agent, it is a business, collects that from you and pays that to the taxman or to Kenya Revenue Authority. And that's why we call it indirect tax. It is not directly payable by the businesses, it is payable by the final consumer, who is the business. Then the next question we ask is, what is the rate? Before even I go to the rate, there is that aspect of supplied in Kenya or imported into Kenya. So if you are supplying businesses, or if you are supplying toys in China, you have started a business in China or in Dubai for selling toys, you are not subject to VAT in Kenya. So the fundamentals are: one, it has to be in Kenya and you're dealing with taxable supplies. There are two rates: the general rate at 16% and the zero rate for exports or for zero rated supplies. But there is something else that is called exempt supplies. And I know you hear this when maybe the budget is read. You hear this has been changed from 16%, bread has changed from 16% to exempt, or they want to tax unga. It was exempt, why not zero rated? It is because we have three models: one, 16%, two, 0%, and three, exempt. So how do you know where you fall? It is usually very simple. The law is divided into three sections: the sections for the general operations, another section that has exempt, and another section that has zero. So how we interpret the law is that if your product or your service is not on the zero section or on the exempt section, then you're automatically supposed to pay VAT. As simple as that. So when you're asking, like now, Nicholas said is in the tracking business. The question is, why do you pay VAT? Because tracking business is not listed under the exempt or zero rated. When you come to a farmer who is probably farming onions or tomatoes, is exempt. If you want to check and confirm why, it's because it's clearly stated in the law that when you're supplying onions and tomatoes, then it is exempt. So how you know is just when you reference to the law, are you under the exempt or are you under the zero rated space? If not, then yours is automatically taxable. But there is another condition. The other condition is, what is your turnover? So if your turnover is above 5 million in a year, then you are required to register for VAT. And why it's important for me to mention this is because I've been receiving questions, people asking, what if I do 5 million this year and next year I do 4 million? Once you reach the threshold, you become VAT registered. So it doesn't mean because this year you've made 5 million and next year 4 million that you now start deregistering because you didn't meet this threshold. No, when you register, now you must comply irrespective of your turnover. Unless you consistently make turnover of the below 5 million, then you can apply for deregistration. But before that, as long as you're registered, then you are supposed to remit VAT. Then the question is, when we talk about the pillars, did that supply take place in Kenya? I talked about that. Is it a taxable supply? So what it means is that, is it listed under exempt? If not, then it's a taxable supplies. Then this is something that is very common for businesses. Was it made by a registered person for VAT? So I see some business people, they will issue an invoice and say exclusive of VAT, and then they add VAT and charge the customer. You cannot charge VAT when you're not registered for VAT. You must be a registered person. Was it made in the furtherance of business? So if you're doing business, then you must charge. And then, is it a supply or importation of goods and services? So are you selling or are you importing? So those are the basics. What are the compliance issues when it comes to VAT? How do you know whether you are in the red or whether you are doing the right thing? One, you are registered for VAT, but because you did not sell, you forget to file your returns. That is late filing. So if you are a persistent person who files your VAT returns late, then that is a red flag. Incorrect invoicing. So you want your customers to pay, but you're not issuing ITIMS compliant invoices. That means that that customer cannot be able to claim that VAT. So you must ensure that you're issuing ITIMS compliant services. Claiming ineligible input VAT. What does that mean? You go do your personal shopping, and then once you do your personal shopping, you give your company PIN. Those are personal expenses. They are not allowable. VAT on imports. When you import, for instance, some products for business, you are required to declare or claim them, the input VAT. So I talked about this business forgetting to register once turnover exits the threshold, confusion on exempt and zero rated. So you're supposed to be zero, but you declare exempt, or you're supposed to be exempt and you declare zero. Remember, when you're exempt, you're not even supposed to be registered for VAT. So when you are exempt and then you claim input, that is not allowable. You only claim VAT whether when you are doing 16% or zero, withholding VAT deduction by customers. So you are dealing with government, or you're dealing with customers who are registered for withholding VAT. They deduct withholding VAT from your suppliers, but you have never filed a return. What does that mean? You're exposing yourself, because already the taxman is able to see that you did supply to this customer. Under declaration, your sales are 5 million, but you decide to do 3 million. So it will catch up with you. Why? Because with the era that we are in, government trying to match all data that is available. So your banks will be reading something different from your sales. And not to say that those documents must match. To say that if they don't match, then there must be reasons to explain. Missing trader. I don't know how many of you have heard about missing trader. Maybe you can tell me on the chat whether you've heard about missing trader. And this is why we are being punished each and every day, special table and all those things that are happening. Missing trader is when you're dealing with a customer or with a supplier who does not exist. What does that mean? That you have input in your VAT returns, but that input, you never bought anything. That is a red flag. Failure to input buyer PIN. This is very important for businesses. When you go to the fuel station, when you go to the supermarket, if it's office shopping, when you are selling, when you're buying something, maybe furniture for the office, you must give your PIN so that information can be validated in your records. Credit notes. You issue a credit note. You've been dealing with this customer. Amekupromise, amekwambia, I will pay, I will pay, I will pay. And then eventually they don't pay. And you issued an invoice in January. If you see that that customer is not paying, within the 6 months, raise a credit note. Because if you raise a credit note in December, you cannot be able to claim that VAT. Yet you paid the VAT on behalf of government. Documentation. This is the main thing when it comes to tax. Do you have your invoices? Do you have your export documents? Banking variances, sales variances. Is your information tying? When you're filing your income tax, are you declaring 5 million and in your VAT you're saying 4 million? That if it does not match, then either it has an explanation or it is not correct. Failure to charge VAT when you are registered. So you are registered, but you're not charging. You have input, but this input is not allowable. And then you're claiming. So those are the most common issues when it comes to VAT. And the last, very most important point when it comes to VAT is what we call the tax point. The tax point means that at what point should I pay VAT? Why is this important? Because there are sometimes I've dealt with a client, a lady friend of mine told me that she did a tender to supply some goods, and they asked for an ATM's invoice, she gave. They asked for a proper invoice, she gave. But no, she was never paid. So the question is, at what point should she have paid? Should she wait until the payment is received, or is it at the point when she raises the invoice? And the answer to that question is it's at the point when they raise the invoice. Why? Because it is the way the law is worded. I understand that you might not have received the payment, but the question is, how do you tax plan? Before someone pays you, before someone tells you that before you issue an ATM's invoice, then make sure that you are sure you're receiving this payment so that you're not also paying on behalf of others. So Joseph, you can maybe project the poll and we see whether there are any questions on VAT. And then now I'll invite Ian to do the income tax. Please engage us. The question is, how many rates do we have? What is the VAT rate for exports? Please launch it. Are you able to? You're not able to launch it.
Just a minute.
Eric? What is the current VAT rate? What is the VAT rate for exports? As we wait for that to be launched, maybe we can hear your answers on the chat. You can tell us on the chat, what is the VAT rate for exports? What is the VAT rate for exports? Anyone who wants to give an attempt? It's there. What is the VAT rate for exports? Let's have your votes.
We have so far 4 who have participated in the poll.
Okay. Team, let's participate. What is the VAT rate for exports? Are you there? Okay, you can launch the results. We see whether we are all good. Some 88% said 0%, and 8%, 13% they said that the rate is 8%. Do we have a VAT rate of 8%? It used to be there on fuel, but it's no longer there. So the applicable rate for the applicable VAT rate for export is 0%. How do you know? It is provided for in the law. So when you are exporting, then you must be able to show that the goods actually left the country. So you need export documents to prove that the goods actually left the country. All right, thank you. So Ian, you can proceed with the income tax. Arthur, yes?
Yeah, I had a question.
Yes.
If you're dealing with zero-rated goods and you are
If you're dealing with?
Zero-rated goods,
Yes.
and your income is above 5 million, are you mandated to register for VAT?
Yes, you are mandated to register for VAT because you're dealing with exports. The advantage of making sure that you register for VAT is because if it is 0 and you're purchasing at 16%, then you can be able to claim a refund of VAT that you have paid to your suppliers from the taxman. So yes, you're required to register and claim that VAT and be able to get a refund. Is that a good thing? Yes, it is a good thing. So if you're not registered and you are dealing with exports, you're actually the one who is losing out. All right. I want to invite Eric to do the income tax. Eric, you can project. Sorry, Ian, you can project. As we project the income tax, I think you can do that poll that you had just projected. What is the current income tax rate for businesses? We are trying to project Ian's presentation for income tax. So I wanted you to help us get ready for this income tax. What is the current income tax rate? Okay, you can show the poll. Eric, karibu sana Eric. Works with SI Kenya. They're audit and tax consultants. So it's good for us to share our views together. Thank you. Karibu sana Eric.
Good morning, everyone. I hope it's still morning. My name is Ian Mwangi. I work with SFI Kenya. Just a brief introduction of who we are and what we do before we jump straight into it. SFI Kenya is an independent firm of SFI Global and a member of the Forum of Firms. We are a network of professionals. We provide everything from audit, tax advisory, management consulting, accounting, and the likes. So basically what we'll be looking at today is issues to deal with income tax, as Ruth has already covered VAT. So the big question would be what it is and the types of income tax that is out there. Um, it, it, it comes in two ways. First being the individual tax return, which is for employees who are under payroll and who are obligated to have their pay declared and remitted every month. And then we also have the self-employed or the sole proprietors. And then we also have the corporate tax return, which deals with partnerships and companies. So income tax is applicable to all employees and the self-employed. Tax is on a graduated scale. This is for those on the payroll. We have tax bands ranging from all the way from 10% to I think that 5%, and then also a personal relief of 2,400 per month, which annually comes to 28,800. Then, as I've said, pay is calculated on a graduated scale. So, as a business, in the case where you have employees, you should ensure that you have registered and that each and every month you remit and you file and you remit pay if your employees are above the tax threshold. It is important for each and every business to be aware and to know whether that the PIN has a pay obligation. How to know this is you can check using PIN checker. So in the next slide, I will show you how this would look like. When you open your iTax portal and you go to PIN checker, after inputting your PIN, you're able to see all the obligations that are registered to your PIN. So for a business with employees and a business that is eligible to file and remit pay, that should appear there among the others. The next one under income tax is a corporate tax return, which has to deal with partnerships and companies. So for partnerships, tax is assessed on the individual partners. What this means is that the partnership will calculate the tax due, and then this will be applied to the individual partners based on the percentage of partnership that they own. Then other tax requirements for the partnership would be the same as that of a company. So they'd be required to file payee. They'd also be required to register and file VAT. That is if they have hit the threshold. So say for instance, this year, I'm in a partnership with David and we make say 3 million in profit. So and we have shares on a 50-50. So I pay tax on the 1.5 and then David pays tax on the other 1.5. This is declared on our individual returns, but then the partnership also has to file the annual income tax returns, the IT2C. For companies, corporate taxes or income taxes are taxed at a flat rate of 30%, and this is 30% of profit and not turnover. How we calculate profit is you take your total sales and then minus all the expenses that you've incurred. And this speaks to the need to have a proper record keeping system so that you're able to calculate what it is that you need to pay, not anything more, not anything less. And as you know, and as Ruth might have mentioned, is that the expenses that you declare should be expenses that are incurred in the business. So you cannot go take expenses from everywhere and declare them. No, they need to be expenses that were incurred in the running of the business. Then the next thing that would be important to know is issues to do with installment taxes. These are paid they're paid 4 times within a year on a self-assessment basis. Assuming that your financial year runs from January to December, this would be paid in April, June, September, and December. And then on June of the next year, you'd also need now to do the annual income tax, to file the annual income tax returns. On payee is usually a bit expansive when it comes to knowing the difference between an employee versus a consultant. Who do you have as an employee and who do you have as a consultant? So there are a number of things that are important to look at, and a number of things that are given in law. The first one is to understand or to know whether the contract is a contract of service, which means whether that contract or that employee is an integral part of the business, versus whether the contract is a contract for service, meaning that the contract is task-based. The second one is to understand the level of control that the business has on the employee or the contract or the consultant in this case. Number three is the integration test. How deeply integrated the person is in the running of the business. Is the business able to continue without them, or are they a big part of the business? Number four is business reality, whether this is an own business billing other clients. Then number five, terminology. This is to mean how the wording on the contract is. Have you explicitly said that this person is under employment, or things like those? So just how the wording of the contract is. Then number six, tools and equipment. This basically speaks to whether the business provides the employee or the consultant with the tools they require to get work done. So, and then lastly is the ability to provide a substitute. So I want us to look at something which is called the MICE test. This it just speaks to what, again, we've gone through, the 7 points we've gone through. And it helps us to understand or to get to know how to place our employees or consultants in this case. So number one is mutual obligations, whether the business or whether the consultant is required to provide services for the business within a month, and the business is required to pay them at the end of the month. If so, then they fall under employee. On the other side, if the consultant is only required to provide services upon request, then they fall under consultants. So that is what mutual obligations would mean. Then second, as I said, is integration of the person in the company's operations, how integral they are to the day-to-day running of the company. Number three, the level of control that is exercised by the company over the person. Does the company control what time they work? Does the company control when and where they work? And then number four is on equipment and who provides the tools of trade. I have a scenario, but before we go to that, maybe we can read this bit, which says a true independent contractor will be a registered taxpayer, will work his own hours, run his own business, be free to carry out work for more than one employer at the same time, will invoice the employer each month for his services and not be subject to the usual employment matters, e.g. deduction of pay, annual leave, and sick leave. So as you can see, things like, say, control in there being annual leave and sick leave, things like integration in how and where they work are addressed here. There's an issue of the independent contractor being a registered taxpayer. So for consultants, once you offer your service, you'd be required to, at the point of receiving payment, the business or the employer in this case, quote unquote, would be required to issue or to deduct withholding tax upon payment. So at the end of the year, you just aggregate your all the withholding taxes that have been deducted, and then you pay taxes on that. So, but we look at that later. So that is what is implied when they say that an independent contractor will be a registered taxpayer. In that, for people under employment, the company or the business does the filing, and they also remit and pay the taxes. But for a consultant, you yourself will have to, at the end of the year, come back and pay those taxes. So I will look at a case law. This is a case of between Kappa Oil and KRA, where Kappa Oil had an employee by the name Mr. Ogode who offered human resource services. They had claimed that he was a consultant, but his relationship with the company did not reflect that, as he had been offered an office and was operating from company's premises. He was paid a fixed monthly salary and worked every day from 8 to 5 p.m., just like an ordinary employee. He was also in charge of staff discipline, a function not normally performed by external consultants. And in a letter to Nairobi Hospital from Kappa, they referred to him as their employee. So again, back to the mice test, a couple of things which you can see. Integration is in that whatever he was doing for the company is not a function that is performed by external consultants. Control in that the company dictated what times he worked and where he worked from. And then terminology in that letter to Nairobi Hospital, they referred to him as their employee. So, summary of the judgment and what KRA made out of it, that the applicant was holding out Mr. Ogode as consultant when he was a regular employee. And it was obvious that the company was evading payment of pay, and KRA acted in accordance with the law in its action to demand payment. So, maybe just quickly and briefly on withholding tax. Withholding tax is deducted on a number of things, but what I'd like to focus on is withholding tax for consultants. So, as I said, a consultant is a registered taxpayer. So, in a situation where the payer of certain incomes is responsible for deducting tax at source from payments made and remitting the deducted tax to KRA. So, the company will deduct the tax at source at the moment of paying. Say tax is to pay Ian 30,000, then they will deduct the 5%, pay me 95, and then 5% to KRA. Then any amount withheld should be remitted to KRA on or before the 20th of the following month. And upon successful remittance, a withholding tax certificate is emailed to both the payer and the payee. As I said, withholding tax is not a final tax. One is required to declare the income and the withholding tax certificates upon filing individual tax returns and pay any tax due. The most common rate is usually 5% on management or professional fees above 24,000. So anything above 24,000, then 5% withholding is charged. Then at the end of the year, you just aggregate the amount of your income, deduct whatever was paid for withholding, and then pay taxes on the rest. So with that, I am done with my presentation. I don't know if there's any question. I hope we were able to grasp. So the floor is open to any questions that there might be. Go ahead, Nicholas.
Hi, Ian. Thank you for the presentation. I just had a question on, you gave two categories, employee and consultant.
Yes.
Of payee. How do you categorize the business owner, like a director, or the person who owns the company and he gets maybe director fees, and as in just basically how is the director paid in this scenario?
Oh, okay. So for for directors, after directors' fees are after they've been paid their directors' fees, then they'd also be required to declare that at the end of the year and pay taxes on that. I don't know if that's clear.
Yes. It is.
Yeah. So for the
But they would
company,
still be under payee. It would still need to be like at the end of every month, the fees that are paid.
it depends on whether the director is paid a monthly income.
Then that will categorize him as an employee. Is that right?
Yeah.
Okay. Thank you.
You're welcome. Go ahead, Rafael.
Hi, Ian.
Hi.
I have two questions.
Okay.
Number one, installment taxes. Do they have penalties?
Sorry?
The installment taxes, the one you pay at 4th June and September, December.
Mm-hmm.
Do they have penalties?
Okay. You're asking whether they have penalties, right?
Yeah, like maybe April I paid an installment, like depending on how the
Sorry, I can't
business
hear you.
is.
You're breaking off.
Sorry, I'm saying maybe 4th of April I paid depending on the way the business is, and then for June I skipped. September I paid that way. Will I get some penalties for not paying?
Yes. So yes, there's a penalty for late filing of the installment tax, which is usually, I think, 20% of the difference between the amount of installment tax payable in respect of the year of income and the tax paid.
Mm-hmm.
So, say you do not entirely pay the installment tax while you are supposed to pay, then 20% of the difference is what is charged as penalty.
Okay.
Yeah.
Second one, the withholding taxes from partners, from the partnership firm. How do they
Okay.
affect the individual?
This is withholding taxes that are deducted for the company.
Yeah, for the partnership,
Uh-huh.
how will it affect the individual
Now the individual partners.
partners? Yeah.
So what would happen is, because you see the partners are paying are paying um, are paying tax on the sales.
Mhm.
Oh, sorry, not on the sales, on the profit. Sorry. So I
Eric, I can help you. So is that when you deduct the withholding tax, or rather when a partnership has withholding tax, when you file the returns, the withholding tax credits are credited to the partners, to the individual partners. So the deduction is on the partnership, but when you
Yes.
file the return, that credit goes to the individual partners' accounts, depending on the partnership share. Like if you're 30%, then you get 30% of the credits. So that now you reduce that against your final income tax.
Tax. Okay. Thank you.
okay. So I don't know if there's any other question. If there's none, I'd like to thank you once again for making it to the webinar and hand it over back to Ruth. Thank you.
Thank you, Ian. I think the question we have to ask ourselves as business people when we're engaging consultants, when we're engaging employees, are they really employees or are they consultants? Or are they really consultants or are we calling them consultants, but they're actually employees? So just to make sure that our team here is following, we have a poll. You tell us, is this a consultant or an employee? Is this an employee or consultant? He comes to the office every day. At the end of the month, he's paid as a consultant. He issues actually an invoice. He's the HR manager. He reports to the CEO every day. He doesn't have a company laptop. He has his personal laptop, but he also, in December, when everyone is going on leave, he goes on leave. Is that an employee or a consultant? But he issues an invoice every month and withholding tax is deducted. How many have voted? Of. You can see the results. Ian, this will tell you whether your students were listening. Okay. 79% said he's an employee. 21% said they are consultants. Anyone who wants to defend their answer? Those who are on the employee side and those who are on the consultant side. This happens every day. Yes, Arthur.
I think the leave in that slot has made the person qualified to be an employee.
You can unmute.
Hello, can you hear me?
Yes, yes. Go ahead.
I'm saying, because he has leave, that disqualifies him being a consultant.
So you're on the side of his employer?
Otherwise, the others can qualify to be a consultant. I may be wrong, though.
So he's from just that simple answer. He looks like he's quite integrated into the business. He's the HR manager, so he reports to the CEO. He has leave, comes to work every day. So he is in the business. He's not working outside the business. Not to mean that consultants can't show up every day, but he looks like more of an employee rather than an employer, rather than a consultant. So I agree with you. All right. So just to wrap up that conversation on pay, I think some of the changes in tax planning measures that have been enhanced recently, it's important to mention them. If you give your staff meals, then there's an allowance of 60,000 per annum. That translates to 5,000. What does it mean? So if you have a staff canteen and every day they're entitled to lunch, the question is, what is the worth of that lunch? If it's below 5,000 per month, then they don't need to pay tax on that. Anything above that, then tax will be paid. Per diems, this has been enhanced. For a very long time, the per diem rate has been 2,000 per day, but now this was enhanced to 10,000 per day. What does it mean? When you're working out of station or your staff are working out of station and you give them an allowance of 10,000 per day, then it is not taxable. Of course, this is open to a lot of misuse, because 10,000, if somebody is out, you can say that my salary is 20,000, but I have per diem of 100,000. But you need to be able to demonstrate that this person was actually outside of the usual working station for it to be allowable. Pension contributions, it has for a very long time been 20,000 per month. That was 240, but now you can be able to claim relief up to a maximum of 30,000 or 360,000 per month. So if you're contributing to a pension scheme, or if you have your staff, then maybe they have pension schemes, alert them, tell them we can be able to at least reduce the taxes payable by just allowing these deductions. Non-cash benefits, if you give your staff some benefits that are not cash, for instance, the end of year vouchers, then they can enjoy up to 60,000 non-taxable benefit per month. And now for disabled people, we say if you have a disabled employees, it's good to educate them. They can enjoy exemption for the first 150,000. It's tax exempt, but definitely they must give you the income tax exemption certificate. So they need to follow it up with KRA and the disability office, and they would be able to get an exemption and not pay tax on that salary up to a maximum of 150,000. So how you do it is 150 you don't tax. Then if that person earns 200, you will tax the 50. All right, I think I don't know whether there are any pay questions, income tax questions. An important point on income tax is that the expenses, as Ian mentioned, the expenses must be wholly and exclusively incurred in the furtherance of business. You go to the supermarket, you buy your personal grocery, that's not an allowable expense. It must be related to business. And that brings me to the next point on ETIMS. If those expenses are not supported by ETIMS compliant invoices, again, they are not allowable for income tax purposes. So what are the common compliance issues that SMEs encounter? Failure to register. So you have employees, I don't know whether I have a number here, who have employees who are on a salary every month, but they don't have pay obligation. And even some of those employees are below the threshold. The current threshold is 24,000 and below. But because that employee is below the threshold, the employer decides I will not register in any case I'm below the threshold. Or you don't register for VAT late filing, you don't file or you forget. And reporting, this is very common in Kenya. I do understand that the tax rates are quite high. It looks like the people who pay taxes are the ones who are punished. And so people end up concealing their revenue or under declaring a revenue. But I want to highlight to you some of the things that the taxman is doing. For instance, you are an entrepreneur, you don't file your returns, but you import a vehicle under your name. The question that the taxman wants to know, what is the source of this money for? So as you're doing or you're purchasing, like a case we had last year, a company purchases very huge properties. They purchased properties of 80 or 100 million, but they had never filed returns. And the question was, the declaration is clear from the government's land office that some duty was paid. What is the source of the money? Filing inconsistencies, your bank deposits, your e-teams invoices, your audited accounts, your VAT, everything is not matching. Then you are the one who is causing yourself that trouble. Everything must match. Budgeting, tax last. So you prioritize your operations. Kama ni magari, naekwa mafuta, everything is a priority. But you'd never sit down to ask, what is it? Am I using the tax months, like for VAT? Am I doing business with the tax months? Money. Ignorance of the law. E-teams, many have not joined. Mixing finances, you're using your company account to pay your personal expenses, using your personal M-Pesa to pay company expenses. Like, it's a mix-up, and this is very common for SMEs. But we recommend that you ensure you separate, because when you separate, at least you're able to, one, track your profitability, and also avoid exposing your personal bank accounts and personal M-Pesa accounts to tax audits, informal loans. You saw a case recently. The shareholder took a personal loan. They invested into the business a lot of money, but there was no agreement. There was no clarity on how much in fact, they used their personal loan to finance the business. They did not deposit that money into the company bank account. So when it comes to evidence, you're not able to demonstrate that I took this money and I put it in the company. And you know that the period for keeping records is 5 years. So 5 years ago, you were just starting, but that agreement, now when you want to refund that money, you are told that you are drawing, yet this is your money. So it is very important to make sure that your records are right, you don't have inconsistencies, and you plan for taxes. So just moving straight to, I think we've covered withholding tax. It's due within 5 days. What we have seen most taxpayers doing is that they will pay on 20th. It changed. It's no longer 20th. It's within 5 days, 5 working days from the date of payment. So if you pay a supplier or a consultant today, then by next week, 5 days, you need to have remitted the withholding tax. All right, so any questions up to there? Then we can go to the recent developments. E-teams, I know e-teams was a topic, and the questions that we received mostly were related to e-teams.
Sorry, I have a question.
Yes, proceed, Jessica.
No, sorry, I'm using, my name is Carol. I'm using a different account on my phone. So I wanted to find out, is there a penalty if you don't remit the withholding tax within the 5 days? The 5% after paying. Or may I ask the question again? Is there a penalty payable to KRA once you've made the payment, you've deducted the 5% withholding tax, and you've not remitted it to KRA on time within the 5 days?
Yes, the penalty there is a penalty. So what you'll see when you're filing the withholding tax remittances, it will ask you the date. So if you put the date of payment, if you put January, it will calculate interest and penalties. The penalty for non-compliance is 5%, and the interest is 1% per month of the unpaid amount. Thank you, Carol. Yes, Raphael?
The withholding tax, can anyone withhold? Or you must be registered?
Sorry, Raphael, come again?
Withholdings. Can anyone withhold?
So everyone must withhold as long as you're paying consultancy, professional fee, and payments that are subject to withholding tax. So withholding tax, how it works is that everyone upon payment, all businesses upon payment, that one you don't need to be registered by the taxman. So we are all appointed agents as long as you're making a payment for consultancy, for professional fees, for like this this social media entrepreneurs, the marketing is subject to withholding tax. So as long as that supply, whatever you're paying is subject to withholding tax, then you must remit. You don't need to be registered. And it shows on the iTax portal. I know why you're asking that question is because there is what we call withholding VAT. Withholding VAT, on the other hand, you must have an appointment letter. So not everyone withholds withholding VAT, but withholding tax is for everyone who makes.
Okay, thank you.
All right. Right. So we'll go to turnover tax. I don't know how many of us have heard about turnover tax. We encourage people who don't want the e-teams headache to go to this regime. Why? Because it applies to small and medium enterprises. It is on gross turnover, not profits. So you know the way Ian talked about income, expenses, then you have a profit. Here you pay tax on your turnover. If you're in the business of selling Tumba clothes and your revenue for a month is 200,000, you pay 200,000 times 1.5% and you are done. You don't come and say, of course, we encourage businesses to at least track their profits and their expenses, but for turnover tax, the taxman is focused on the turnover. It is a final tax. So what that means is that at the end of the month, once you pay, the taxman does not expect you to remit income tax. It applies to businesses that are within the 1 million and 25 million threshold. So if you're below 25 million, turnover tax can apply to you. If you're above 25 million, then you cannot go to the turnover tax regime. This is annual turnover. Who does it not apply to? Rental income. If you have rental properties, this is not for you. If you are a consultant like us, or you're offering professional services or training fees or logistics, any professional services, they are not subject to turnover tax. Income already subject to final tax. So like qualifying interest, those we call qualifying dividends, those ones are not subject to turnover tax. Now, there's a question that we get a lot. Should I pay VAT if I am under the turnover tax regime? You remember we talked about VAT being an indirect tax. It is not you who is paying, but you're charging your customers. So if you reach the 5 million threshold that we talked about, then you're required to register for VAT. So your income tax now is turnover tax, but you have to remit the agency taxes. When is it due? It's due. The current rate is 1.5% effective March 2024. The only technicality is that, unlike the way we wait until the end of the year to think about income tax, turnover tax, you must file monthly returns, just like the way we do VAT. So you'll be filing two returns, VAT and turnover tax on the 20th of the following month. We've given you an example here. Your gross sales for a month is 100,000, total purchases 80,000, duty payable is 1.5, so you don't offset. So the question, or how to know where you fall, like for this person who made a profit of 20,000, if you did 20,000 times 30%, they would pay 6,000. So before you decide where you fall, then you ask yourself, what is my actual tax liability? If I'm paying 1,500 instead of 6,000, then I better file my returns every month, because if I'm allowed, then why not? So you need to do to check how you've been performing to be able to know where you fall. So that's on turnover tax. We had a poll. We can launch the poll just to make sure that we are following, and maybe also invite any questions on TOT. What is the current TOT rate? Current turnover tax rate? Is it 3% dues, 3%, 1.5%, or 1%? Is it 1%, 1.5%, or 3%? We can launch the results. Actually, I asked that question when the when the slide was up. So good job, 100%. Very good. So the current rate is 1.5%. Any question on turnover tax? If you're a small business, you deal with people who don't want to, with businesses that are not very organized in terms of e-teams and all that, then this is where you fall, as long as you're within the threshold. All right, I'll go to the next. I've seen there's some questions. Must it be paid with housing levy? Yes. So the housing levy answer is this. If you are a business person, or if you're a company and you have employees, then you pay housing levy on the salaries that your employees earn. So if you want to manage that aspect of housing levy, then make sure you are filing pay returns on your employees, because there is an exemption for housing levy on the turnover if you're making declarations for employees. But if you don't have employees, you're operating as an individual, then that is your income. You pay 1.5% on the gross turnover. So it's like 3%, but it's, again, tax planning. All right. We go to what are the emerging issues. How many of us have heard about the VAT special table? You can raise your hand. Nicholas has heard about it. Anyone else who has heard about it? Raphael? I hope it's just hearing, not experiencing it, Nicholas. If it's experiencing it, pole sana for you. If it's just hearing about it, then the question is, how do you manage to avoid it? So what is VATC special table? It's a system that the taxman has introduced, I think last year, but one. And what happens is that the taxman blocks you from filing VAT returns. Once the taxman has blocked you from filing VAT returns, you cannot file. And when you try file, it shows you an alert saying that your PIN is under compliance review. The other and very, very unfortunate thing is that your customers cannot claim VAT from your invoices. So it's like they've stopped you from doing business. Why? Because if your PIN, you cannot file, and two, your customers cannot claim. So they're asking your customers to pay you, but they're telling you, but how are we paying you, yet we cannot even claim input VAT from your invoices. Why the special table? The aim is to reduce fraud, and mostly it's because some business people used to use what we call fake invoices to inflate their input, or what we call the missing trader. So you have input VAT, but that input VAT is not legitimate. So how do you know? So currently they are sending an email saying that your PIN is under compliance review. And again, even if you don't know your clients, when they are filing, they will be restricted from claiming that VAT. So they will tell you what or why does it happen. One, you file returns, but you don't pay the VAT. So you are a very good person who files, but you say that I don't have money, or these customers have not paid, or maybe it's genuinely there is no money. But so the question now you ask yourself, if I'm filing VAT return, then I must make sure that I have reserves to make sure that I pay this VAT. You don't file returns, or you are consistently filing nil returns. So if you're a nil filer, what the taxman wants to know, then why do you have this obligation? You're better off not having it. Consistent of VAT credit position. So you are persistently in a VAT credit position. Remember, we said that VAT is output minus input. Ideally, if you're in business, or if your business is making profits, then, and you're not a zero rated, the exporter, then the expectation would be that you are in a VAT payable position. So if you're always, your return is showing a negative, then that's a trigger to being put on the special table. And then significant variance between declared purchases and sales. So you have a lot of sales, you have very low sales, but you have very high purchases. So the taxman just wants to do an investigation on why. So we talked about that. Now, the process of removing your PIN from special table is very comprehensive, because the taxman usually does what the tax or a VAT audit. So they'll ask for your bank statement, they'll ask for your TCC as the director, the TCC of the company, they'll ask for all your purchase invoices, your sales invoices, and many documents, in the attempt to try and confirm the validity of your VAT return. So what we encourage, or what we urge our clients, is that ensure that if you're in a credit position, then it is verifiable. If you are filing your returns, make sure that you are able to pay. And the other bad thing is that, and doing this, I have seen clients who are placed on the special table in January this year. It was removed this month. How many months later? 11 months. You remember we talked about the 6 months input VAT rule. So you can only claim input if it's within 6 months. So your clients have not been able to claim this input VAT from you since January. You're removed from the special table in November 2025. The question, in most cases, you will find that because your customers were not able to claim, you see, it's not their fault. They will push that burden to you, or they will not pay you the VAT portion. So you end up bearing the burden on behalf of the taxpayer, or rather on behalf, or you will end up not claiming VAT or pay VAT, because your customers you had been placed on the special table. Sorry about that. I'm just looking for my presentation. Sorry about that. Anyone who has a comment on the special table, anyone who has experienced it, maybe want to share their experiences? Any?
Sure.
Anyone who has experienced? Does this mean that you can only claim the input for 6 months? Yes, you can only claim input for 6 months. So if a customer, if you buy something or you make purchases in November, you can only be able to claim the input in November, December, January until 6 months. If 6 months lapse, you cannot be able to claim VAT. That used to affect businesses a lot when we were doing manual filings, but currently the information is already auto-populated, so it's very hard for you to lose out on any VAT unless for instances where a PIN is under the special table. Okay, I keep losing my presentation. Okay, let's go to now the part on the part where we are talking about e-teams. Anyone wants to ask their questions on e-teams? Anyone who wants to say something on e-teams? What are your challenges? I want to agree with you. I think this thing is really affecting many businesses. Anyone wants to say something? Okay. Auto validation of income and expenses. You also the notice. I believe you did. The regulations, the tax procedures, electronic tax invoice regulations starting January. The iTax system will automatically check everything declared in the income tax return as income and expenses against e-teams invoices, withholding tax records, input data. So what does this mean? First, maybe just before we go to this, what is e-teams? E-teams is Mary, you can mute the electronic tax invoice. e-teams stands for Electronic Tax Invoice Management System. So it's a system that KRA uses to view the invoices that business people raise. So before e-teams, we would raise invoices and do declarations for VAT based on those invoices. And even for income tax, we would do declarations based on our internal records. So what e-teams has done is that the system, the invoices that we raise are transmitted into the taxman's system, so that as you issue your customer with an invoice, then that information is transmitted, and so the taxman is also aware of the invoices that you have issued. So the question is it a good thing? Is it a bad thing? And I want to agree with you. People don't like it. But what do we say when we talk about tax? We talk about the law. So it might not be interesting, it might not be good, but we have to comply. So I saw a question on who is exempt from e-teams. Or the question was, is the 5 million threshold still a small business people are mama mbogas supposed to give me e-teams invoice? So before I go to the mama mbogas, the exemptions, I want to just quickly go through the exemptions. There were somewhere here. The exemptions to e-teams, you can look at bullet 3. expenses without items unless exempt. Imports, so for imports, they are exempt. Interest, if you're paying interest on a loan, it's exempt. Capital allowances, this is what you call depreciation. So for your computers, for your furniture, for your construction, if you constructed a building and you're claiming what we call capital or investment allowances, then exempt from items. Emoluments, these are salaries, staff salaries. We should not ask our staff to give us items invoices. Airline ticketing, so air tickets are not subject to items and payments subject to final withholding tax. So those are the exemptions that are there. Now, talking about the 5 million that came, I think, towards last year. The 5 million threshold is applicable, and it means, what it means is that that small trader who is below the 5 million threshold is okay if they don't give you an items invoice, but they must do what we call buyer initiated invoicing, or what others call reverse invoicing. What does it mean? Kamau or Otieno is a mechanic. They will not be able to go into those technicalities of issuing items invoices. But when you trade with such a person, you should reverse invoice yourself. So you log into your eCitizen platform and say, I paid my mechanic 20,000. His name is this. This is the amount I paid, and it is for this service that they offered me. And then you will get an items invoice. But Kamau will be notified, or Otieno will be notified. And you can only be able to conclude or complete that process when he confirms. So he will get a message telling him that company A has initiated an invoice, confirm if this is acceptable to you or not. So yes, the exemption is there, but it is not to be ends there. You will have to go and initiate an invoice for yourself, and that he has to approve. So in most of the cases, you will see, yes, I have seen people who, those small traders who accept to be reverse invoiced, but most of them don't accept. The thing I feel that should happen is that they need to be sensitized, because the minute he approves, then the taxman will reach out to him. So he needs to know, yes, I will do this via invoicing. I will initiate myself, but you will be expected to declare your taxes. So just now going to what is going to happen, I just want to introduce the issue of what exactly will happen. So if you issued, or if you have some purchases, recently we had a case where the customer or a client brought us all the invoices, and so me, I'm very compliant. I asked for items invoices for all my expenses, but when we checked, the invoices did not have the buyer PIN. So yes, you have an invoice from the petrol station or from Java or wherever you go to do your meetings for business, but you did not give the buyer PIN. So that means, yes, you have an items compliant invoice, but it cannot be validated to you. So then what are we saying? That if you have those items invoices, you need to ensure you give your PIN, and this is provided in the regulations. If you have not been issuing your PIN, that's where now the system is coming to affect us, because what will happen is that the data is already with the taxman, the data that is mapped to your PIN. So you know the way we do VAT returns, that is how the income tax now will be filed going forward, that you find the data there. It's you to just confirm or remove whatever is not, but you will not be able to input data that is not on the system unless it is specifically exempted. So that is what is happening. We say, yes, you might try avoid, but it is not for long, because one, we have seen that many business people are insisting on these items. So say that we comply or not. I've also seen many questions asking, if I'm in the rental space, should I issue items invoices? If I am a school, should I issue items invoices? If I am I'm a small trader, should I issue items invoices? And the answer to that question is yes, unless you are specifically exempt. So it is upon us as SMEs, as accountants who are working for SMEs or accountants who are working for big organizations, to ensure that before a payment is done to a supplier, then that payment has met all the conditions. It is items compliant and it has the buyer PIN on it. We saw last year when we were trying to validate some invoices for a client that they have a PIN, but the PIN does not belong to you. For instance, Nicholas, you have an items invoice, but maybe you didn't check to confirm that that PIN is yours. So it is mapped to somebody else's PIN. So I know it's hard. It's the beginning. Eventually, the whole goal is to make sure that all people or all businesses pay tax. I saw yesterday that 80% of the Kenyans population, the contribution is from the SME, but only 1% of tax is paid by SMEs. So I think that is why the aggression on ensuring that all data is submitted. So I don't know whether we have any questions. I know it's challenging. We are also facing it, but what we encourage is that at least do 80%, 90%, but don't ignore it in entirety. So I will invite questions. I don't know whether we have any poll or items. I want to see whether we have questions. Does this mean that you can only claim? Okay, how can someone claim VAT for purchase over previous month? With the auto-populated method, then you just have to claim it in the current month, because it does not provide. What if you are just starting and the business revenues are still below 1 million per month, per annum? What tax obligations are you liable for? Income tax. But you can also register for TOT. So thank you. Those are the questions that I can see. I don't know whether anyone wants to unmute and say something. I had received a question here. If I register for TOT, then after a few months decide that I want to do income tax, what should I do? You should go to your iTax portal and deregister for the TOT obligation, because automatically everyone is under the income tax. So you need just to deregister for the TOT obligation so that you don't have that obligation of filing monthly. What I need to mention is that usually undoing, or rather removing obligations, is not an easy task, but it's allowed in the law. So but you cannot, it must not be at this year I want TOT, next year I want income tax. Then you need to also decide on where you fall. If it's an issue of the threshold, yes. If it's not an issue of the threshold, then you need to really plan before you register for TOT, so that when you register, you know that this one is, but you cannot be changing each and every time. All right. Sorry, I stopped sharing. So I wanted I wanted to request if we have any questions live. Any live questions? You can unmute. There's a question. Hi, team. The amount in items can either be 16% or 0% or exempt. What are the implications? Yeah, and VAT. Raphael, can you unmute and maybe expound?
Hi, Ruth.
Hi.
Now, for items, I can raise an item. The 60% which is portable, the rest can be disbursement or other expenses, because some clients normally ask for an item with the amount due for the whole amount, and you see
For the
maybe
full amount.
yes, as in what is appearing in the invoice in the items is what the client is paying. 16% will go to VAT.
Yes.
The exempt and zero exempt, the 0% and the exempt, how will I treat it or how will it appear?
Okay, so for those ones that have zero VAT, those ones are okay. For exempt, again, those ones are okay because when you're raising an invoice, you need to, when you're registering for items and you're registering your supplies, there is a question on what exactly are you supplying. So is it exempt, or is it zero rated, or is it vatable? So as long as you have mentioned properly the applicable rate, then it should be okay because it will show the different tax rates. But we can engage more so that we see your exact scenario to be able to maybe answer you satisfactory if you feel you're still not satisfied. I know there has been a challenge with like the clearing agents, the clearing agents and other agency business models where you have these invoices that you are raising. Some of them are not mapped to your PIN because they are mapped directly to the customer. I had the team leader from KRA, the team leader in charge of the teams project, saying that they are looking at those issues. It's a sector that's affected. It's under work in progress. So we need maybe to do submissions for that. But for the normal businesses which have no technicalities like yours, then they need to ensure they are compliant.
Can I treat them as expenses when I'm doing my filing for the year?
Yes, one of the exemptions is what we call, they're saying investment accounting adjustments. So if it's just an in and out, then it can be allowed as long as it is supported.
Okay.
If there are no further questions, we can conclude by saying a big thank you for taking your time to join us. After this, we will be able to share the recording together with the certificate of attendance for your records. But feel free to engage us if you have any questions, if you have any comments, clarifications. We are available to support and assist. So thank you very much. and have a good afternoon.